China and Russia have been trying to challenge the dominance of the US dollar by using gold in recent years. Both countries have been accumulating significant gold reserves to diversify their foreign exchange reserves and reduce their reliance on the US dollar. China has been the world's largest gold producer and consumer for several years and has steadily increased its gold reserves since 2015. On the other hand, Russia has been rapidly increasing its gold reserves in the recent years, becoming the world's largest buyer of gold in 2018. Now, by accumulating gold reserves, China and Russia are signaling their desire to diversify their foreign exchange reserves and reduce their independence on the US dollar. This move also challenges the US dollar's status as the world's dominant currency. So today, let's talk about what economist Jim Rickards thinks about China and Russia's efforts to ditch the US dollar. And at the end, let's also examine what you could do to protect yourself from the uncertainties of the global financial markets. Hey friends, welcome to Capitalista. Before we dive in, please take a moment to hit the like and subscribe buttons down below. And now, let's get started. In 2009, a financial war game was conducted, and one of the plans that emerged was for China and Russia to accumulate gold reserves, turn their back on the dollar, and launch a new digital currency backed by gold. Jim Rickards, one of the game planners and a friend of the Russia team, cooked up this plan. The plan was to convince the Chinese and Russian teams to buy as much gold as possible and use it as a payment for Chinese exports, turning away from the dollar in the process. This idea was initially met with skepticism, as gold was not seen as a significant part of the monetary system at the time. However, this plan has played out in the years since, with both countries significantly increasing their gold reserves and looking for ways to move away from the dollar. The plan was intended to get the Pentagon thinking about what might happen in the future, and it has turned out to be perceptive. The overuse of financial sanctions has caused many countries to look for alternatives to the dollar, and the accumulation of gold reserves has given some countries the confidence to turn their back on the dollar. The plan involved launching a new digital currency backed by gold, which would serve as an alternative to the dollar. This idea was that this currency would be based on a mature bond market, with primarily dealers, issue trading, auctions, and settlement clearance. However, the yuan and ruble will not likely replace the dollar as the global reserve currency. That's because they do not have the infrastructure or the rule of law to support a mature bond market. Meanwhile, financial sanctions can significantly impact countries, but their unintended consequences are often overlooked. Governments often use these sanctions to punish countries that violate international laws. Still, the overuse of financial sanctions can lead countries to seek alternative currencies and assets outside the US dollar. In the case of Russia, for example, the US government's frequent use of financial sanctions has caused the country to turn to gold to store wealth and avoid the US dollar. Russia has increased its gold reserve significantly and holds the physical bullion within its borders to prevent freezing or seizure by Western governments. Other countries are also exploring alternatives, such as using the Chinese yuan as a global reserve currency or diversifying into natural resources and real estate. The impact of financial sanctions and their unintended consequences can be far-reaching. That's because they can lead to a loss of trust in the US dollar and undermine its position as the global reserve currency. This in turn can create challenges for the US economy and its ability to finance its debts. Now, in his book Currency Wars, author Jim Rickards discusses a war game scenario where Russia and China would accumulate large gold reserves, pull their gold, and launch a new digital currency backed by gold in place of the US dollar. Since that war game, Russia and China have significantly increased their gold reserves, with Russia now holding 2,300 tons and China holding approximately 2,000 tons. Rickards believes that having large gold reserves inspires confidence and provides a way for countries to protect themselves from a global liquidity crisis. He suggests that a new currency backed by gold could instill confidence and potentially replace the US dollar as the global reserve currency. However, he also acknowledges that such a currency would require a mature bond market and the rule of law, which are currently lacking in China and Russia. And as the US government continues to use financial sanctions as a foreign policy tool, Rickards warns that this may push countries to look for ways out of the dollar system and turn to alternative assets like gold. In such a scenario, having a large gold reserve could could be an advantage for countries like Russia and China. However, it's important to note that this is a complex issue and requires careful consideration and analysis. The Chinese yuan and the Russian ruble have been touted as potential replacements for the US dollar as the global reserve currency. However, both currencies face significant limitations that make them unsuitable for this role. One of the Chinese yuan's key limitations is the lack of infrastructure required for a mature bond market. While China has made efforts to develop its bond market, it still lags behind the United States in terms of size, liquidity, and depth. Moreover, China lacks primary dealers, auction mechanisms, and a robust legal system required to support a large bond market. Another key limitation of the Chinese yuan is the absence of the rule of law. China's legal system lacks transparency and is often subject to political influence, making it difficult for foreign investors to have confidence in it. This lack of confidence could make it difficult for China to attract the capital needed to support a global reserve currency. The Russian ruble also faces significant limitations as a potential global reserve currency. One key limitation is the lack of infrastructure required for a mature bond market like China. Russia's bond market is relatively small and lacks many of the features needed for a mature market, such as primary dealers, auction mechanisms, and a robust legal system. Moreover, the Russian ruble suffers from the absence of the rule of law, which makes it difficult for foreign investors to have confidence in the system. The Russian legal system is often opaque and subject to political influence, which could discourage foreign investors from investing in the currency. And it is crucial to protect oneself in a global liquidity crisis by investing in assets immune to such crises. These assets include land, real estate, gold, silver, commodities, and natural resources. Investing in real estate or land can be an excellent way to protect yourself, as the value of these assets tend to be less affected by market downturns. Precious metals like gold and silver also tend to hold their value well in times of crisis and can provide a hedge against inflation. Natural resources such as water and energy can also be suitable investments as they are always in demand and tend to hold their value over time. Additionally, investing in stocks of companies based on natural resources can be a good strategy. It's important to note that diversification is key when it comes to protecting your assets, and by spreading your investments across multiple asset classes, you can reduce your overall risk and protect yourself from the impact of any one particular crisis. Seeking professional financial advice can also help determine the best investment strategy for your individual circumstances. So what are your thoughts on a gold-backed currency? Do you think it will work? Let me know in the comment section down below. And that's a wrap for today's video. Thank you for tuning in to the end. We appreciate your support and hope you enjoyed the video. Don't forget to give us a thumbs up, hit the subscribe button, and turn on notifications so you never miss an upload from us. Your engagement helps us bring you even more exciting content in the future. Until next time, and take care.